Welcome to our webinar series on Insurtech, the current state and future directions for the insurance industry. My name is Swanatama Ganguly and I'm the founder director for KPI Consulting. As I was discussing at KPI Consulting, we are serving our customers on the talent transformation front, also the project specific needs, especially on the digital transformation technologies. And also we deliver a lot of programs related to banking sectors, related to credit risk, market risk, liquidity risks, and so on. So before we start, few housekeeping rules. Please keep your mic on mute mode, uh, and also we will be taking the questions one at a time. Meanwhile, you can also park your questions in the chat room, right? So let me introduce you to our today's moderator, Mr. Surya Saha, who is a very young and dynamic senior risk consultant with a decade of years of experience in the industry and happen to be a good friend of mine. Surya is also the PhD scholar focusing on blockchain for insurance, especially in the area of blockchain implications in the insurance claims process for a modeling perspective to reduce claims fraud and increase efficiency in the system. Besides, he's also author of a book called The Digital Choices that enables the understanding of what's going on in the ecosystem when we say digital transformation. And we should be doing what should be doing to the strategies and priorities to leverage and optimize every possibilities and opportunities when we say the any of the technologies that has to offer on digital transformation. Lastly, he's also a member of the board of the Hope Foundation, Ireland and India. Also, he's in the steering committee member of Europe India Center for Business and Industry. So let's have an interesting session. So Surya would be having a few questions to our guest speakers, and probably post to that we will take one of the questions. Over to you, Surya.
Thanks, Mr. Ganguly, for the kind introduction. Welcome, everyone. Welcome, Suresh. Welcome, Tunde, for being here this afternoon with us. It's a wonderful opportunity, and of course, we're looking forward for a wonderful session. I'll just quickly do the introduction round first. Mr. Tunde, Dr. Tunde Salako is an Insurtech entrepreneur and Insurtech catalyst with experience in the business of increasing access to quality of healthcare locally and intercontinentally. His background and expertise have obliged him the privilege to have cut across several industries spanning insurance, healthcare, and pharma, and more recently, data science. His interests cut across technology, innovation, and business process automation. He is passionate about the use of technology to galvanize inclusion in the insurance ecosystem, and hence that has formed the reason for the start of the social impact initiative, which is nothing but the African Insurtech Rising. He is also currently the CEO and co-founder of an African Insurtech called the Head. Besides, in the past, he served as an advisory board member of the Imperial College Business School Alumni Advisory Board between 2015 and 2016. He is an alumnus of the prestigious College of Medicine at University of Lagos and also the Imperial College Business School, United Kingdom. To move on to Mr. Suresh, he's the Senior Vice President and Head of Corporate Marketing for the South and Eastern zones for Go Digit Insurance Company. He has over 15 years of experience and started his career as a management trainee with Bajaj Allianz General Insurance Company and grew to be national head of a key institutional relationship between before joining Marsh. So Suresh has joined Marsh as a lead consultant, advising large corporates on their risk management and insurance programs. He grew within the organization and went on to become a vice president responsible for their Chennai branch. After a successful stint with Marsh, Suresh joined the leading Insurtech Go Digit Insurance in 2019 with a mandate to set up and grow their commercial lines business. Suresh is a computer engineer from Madras University and holds an MBA from Ford School of Management, New Delhi. Suresh is a fellow of Insurance Institute of India and holds advanced diploma in insurance from Chartered Insurance Institute of London. Suresh recently completed the Harvard Business Analytics program with distinction from Harvard Business School. With this, I will open today's discussion, which is on the future of Insurtech. To start with, I'll just give a short brief. That is, in 2018, we have seen the insurers' net income grew by 66.3% as compared to the previous year, 2017. And the market size available for claims processing improvements is projected to be around $72.5 billion roughly. And for underwriting improvements is $175.4 billion roughly until the 2023. So it's kind of an interesting estimation that's out there for the Insurtech players to look into. So with this, of course, the dawn of new decade, we are seeing many predictions that are being made about what Insurtech has in store for the industry. And as we move through 2020 and beyond, many of the predictions and expectations remain focused on the art of what is possible. That is, will an app-based algorithm unlock the doors to the millennial market? Will it be blockchain that finally makes insurance purchase a wonderful experience? What is it? So with this, we aim to discuss the future of Insurtech and the current state and future direction for the industry. Once and all, welcome everyone on board. I'll start with Mr. Tunde. Mr. Tunde, can you hear me? Hello?
Hi, loud and clear.
Perfect. Right. So, Mr. Tunde, insurance as an industry, and as I've just given a quick brief, is, we all know it's very conservative in nature, and it has long operated without any significant disruption. But then comes all the emerging technologies disruptions in which Insurtech, which is quickly emerging to shake things up a bit in the industry. So with this, how do you think Insurtech can benefit the traditional insurance market? And could you also give some views on how this is going to be for Africa, considering the fast movements in Insurtech activities we are witnessing in the region? Over to you, Mr. Tunde.
Okay. Good evening, everyone. It's a pleasure to be on the platform. Thank you, Surya, for the introduction, and my co-panelist, Suresh. It's a pleasure to meet everyone here. So here's where I think we are, right? Because the space is really burdened, it's evolving pretty fast, beyond the scope of what everyone would have envisaged 2 years ago, or let's even say last year, right? Last year, from estimatedly what we saw on the figures on a global scale of the kind of funding which is going into Insurtech, the numbers are encouraging. And so that means that within the next 2, 5, 10 years, there's bound to be the exponential growth. With the rise of Insurtech startups and with the maturity which corporates are taking on a day-by-day basis, what I see from our own side of the fence on this side of the continent is the fact that, number one, emerging technologies are going to be the critical ingredients that will drive and catalyze a lot of changes within the insurance space. And then number two, it's also important to also look out at the trends, right? Because the trends that are emerging globally, not even in specific parts of the continent here, globally, we're seeing trends where the customer, the consumer, is becoming digital, right? And we're seeing a lot of trends where there's a focal point on consumer behavior data. We're seeing trends where there's a focal point on the use of IoTs and wearables and other emerging technologies like that. So for me, my viewpoint will be, it will be an intersection where all the emerging technologies are able to fuse and complement each other so that the value in which they actually produce, creates massive growth in the insurance industry. And that cuts across every spec, right? From health to auto insurance to life to general. I mean, the advent of telematics, for instance, is a very interesting area, which is actually using consumer behavioral data, to galvanize the kind of risks and the kind of premiums which car insurance actually takes. It means that in the next 5 years, or even before then, people will be able to pay insurance on a micro level based on the kind of data which their cars are generating. So it's very bright. We know the COVID-19 has sort of slowed down a lot of things, but at the same time, it's better for us to look at it from the perspective of how it has actually created more opportunities. It's fast-tracked a lot of technologies which we thought was going to take a bit of time before maturity, right? And so these technologies have presented themselves now. I think the future has been brought to the present, and I think it's very bright on a global scale.
And absolutely, that's one of the very good point raised out there. So you have mentioned on telematics and of course the wearables and interactive mobile health, and what are the opportunities that is leaving us, or rather the insurtech players within the data and analytics space. So it's something that we are certainly looking for, how the insurtech players will work with insurers to obtain and analyze such data, leading to better pricing, more useful interaction with customers, and how they exactly try to gauge the future behaviors. I think that's some of the important points. Thanks, Mr. Tunde. With this, we'll move to the next point. That is, insurtech applications. We all know it's something that is emerging around the world, and if I look at it like in two waves, one is for the world, and then especially in the sub-Saharan Africa, we have seen mobile insurance of late has already provided access to insurance for millions of people for the first time. So now, taking a step further, mobile and other digital technologies are now changing the customer journey through individualized underwriting, maybe with new products, or also by enabling more regular communications with the customer. So with this in mind, how do you think insurers and insurtech pioneers can best digitize their process across the value chain, starting from the initial application, the KYC process, premium collecting, and through to claims payments? Mr. Turner.
So that's a very interesting dynamic. I say it's interesting because the advent of mobile technology in Africa and on a global scale. Also, if we look at what has happened in the past 10 years, more recently in the past 5 years, right? What has happened is the acquisition of mobile technology, mobile phones and internet-enabled phones, smartphones, has surged exponentially, right? And so what that has done is it's brought goods, services, and products to the hearts of consumers, right? And even where you have suburban areas and villages, rural development, what is even happening is the mobile penetration has reached far and wide in those areas. And so what that has done is it's encouraged a lot of inclusion in terms of the direction in which technology is being adopted. Now, when you talk about the advent of data and the usage of internet, there's a lot of widespread in different parts of Africa, although it differs. Like, for instance, the rates at which you can access data in West Africa is totally different from some parts in the region of Southeast of Africa. But notwithstanding, what is universal is the fact that with the advent of technology, the USSD technology, keep bearing in mind particularly the M-Pesa model, that is something that has been birthed out of Kenya, for instance, and has actually created a lot of galvanizing for different products to latch onto it. One of the insurtechs within our community, Blue Wave, is doing phenomenal work in that regard by leveraging on the M-Pesa mobile wallets and technology to be able to include their own products and services on that platform, which means that the outreach and the coverage, increases over time. And so that's just one model, but that is being replicated in different parts, of Africa. Another example is the micro-insure business. Micro-insure is doing phenomenal work in different parts of Africa. In Ghana, they've partnered with a mobile network operator, and it's so easy to now integrate micro-insurance, right? Leveraging on the back of mobile technology for wider outreach, to calculate premiums, to underwrite policies, using technology such as artificial intelligence and machine learning. So those are things that will continue to birth. Those are things that will continue to evolve, particularly now that the bandwidth is there. So 5 years ago might have been a little bit more difficult, right? But as we're seeing the statistical part of machine learning and data science evolving, right? I think that quantum is expanding very, very critically. And so what you're having now is you're having a situation whereby, from data science is morphing into artificial intelligence to machine learning, and then there's advanced artificial intelligence, which is coming very closer into the space. And so leveraging on the evolution of these technologies, I think what's going to happen is it will just draw people closer into the inclusion nets, particularly when it comes to the insurance nets. In Africa, on a scale, its penetration is still less than 5% or 3% or thereabouts. So it's a lot of work. Particularly, we are amounting to a quarter of the people on the planet, 1.2 billion people thereabout. It's a lot of people to be covered. So it's evolving. It's bright, and with or without the pandemic, what we see on this side is with the advent of the insurtechs galvanizing the things that are happening, in the traditional insurance industries, it's going to grow exponentially.
Right. You've mentioned a very good point out there. In emerging technologies, the primary issue is not challenges faced with the technology itself. It's what we're looking at large is the people, is to bring people together. I think that is one of the biggest way forward on how the industry should look into. And of course, as you said, Mr. Tunde, the results, essentially what we're looking at is to reduction in the administrative overheads, and also how customer benefit can be enhanced, like you have mentioned, on receiving payouts in their mobile wallets directly. And one of the greatest example of today would be how Lemonade have leveraged the platform to help motor insurance in the space. So some of the interesting developments out there. Thanks for your views, Mr. Tunde. With this move, we will move on to the second part of it. That is, something that is very relevant as on today. Mr. Tunde, what COVID-19 would mean for Insurtech as per you, and what do you think are the potential implications that we are looking for in this particular sector, perhaps at a global scale? Can you hear me, Mr. Tunde?
Can you hear me now?
Yes, I can.
Okay. All right. Great. So that's the talk of town everywhere now. That has to do with COVID-19 is the one dictating the space in across the globe for every single thing now. Unfortunately, that's our reality, right? And what is currently happening at this phase is the fact that you're beginning to experience a situation whereby every business, every ecosystem is having to retweak and retool, to be able to survive and also sustain their businesses through this period. So on a scale of affecting the end user, which is the consumer, and the insurance companies and the insurtech companies, what this situation has actually brought about is it's fast-tracked and brought forward a lot of things that would have been in the pipelines behind the scenes, had it been the pandemic hadn't come. And for example, I would let's use a critical scenario here, right? One of the things that is happening globally now is people in healthcare, people are not able to go into physical facilities or clinics to access care the way they would have last year, right? And so what has happened is there's been a shift because of the risk of the coronavirus. When we come to financials, people are skeptical about making physical contacts in financial transactions, right? And so what that has done is catalyzed the growth of having an invisible wall where financial transactions can be conducted so that there's a risk that the risk of contacts, is significantly minimized. So for insurtechs, what has happened is, and for insurance companies, is it's now showing the possibilities to be able to, come down on a micro level to tweak products and solutions to give essentially micro solutions, right? The micro insurance services, usually catalyzed by APIs and other technologies, have been, a bit of a struggle. And the reason why is not because the technology is not readily available, but it's been for the fear of acceptance. And, insurance is not something that traditionally people will just latch onto. You don't see people just going to say, hey, I'm going to the supermarket or the mall and I'm going to go and buy an insurance plan off the shelf. It's usually something that takes a lot of time where you have to ask questions, you have to really be deliberate, or possibly you're riding on the confidence of a friend, a colleague, a relative, or someone you trust to be able to make those purchases. Now, with the advent of the pandemic, what is going on is the fact that bridge has been mended, right? The bridge between the trust and the access. And so what on the supplier side, has happened is a lot of people have had to go back to the shelf to say, okay, so for instance, how can I bring products that will enable certain SMEs or micro MSMEs to actually get products that will give them access without letting them commit to as much premiums which they would have paid on a regular basis. So in healthcare, for instance, one of the things that is happening is people will now be a little bit more comfortable with purchasing micro health plans that possibly can give them access to virtual or remote consultations and can only get them into the hospitals when there's a need for an emergency or procedures or certain things that necessitate them being in a physical building, right? For the auto insurance, what's happening is because people are not necessarily, with the restrictions in the different parts of the globe happening, curfews and all of that, timing is very key. Cars are not on the road the way they should be. Although, where I am, it's a different story entirely. But it gives the insurer an opportunity to say, okay, can I scale it down and customize my products, to be able to work within a certain period of time, whereby, look, I can subscribe to a daily platform, right? Where I just go out and it's covered between this period and that period. And I know that I can subscribe and it's dialed down a bit for me, it's cheaper. For the brokerage industry, a lot has also even happened. So there are certain insurtechs on this side of the fence, such as Kagbima, that has actually, developed their own prototype dashboards, right? And APIs for brokers to be able to still, deliver those bespoke insurance products to their customers by going through their own customized dashboards and sort of creating a warehouse for them so that they're able to channel, their users' business, their usual business through that platform, right? And so it's fostering a lot of innovation. What I think this has holistically provided is, number one, a catalyst for the innovations that we didn't expect to see to come to reality and fusion more quickly. And then secondly, to bridge that trust, because right now people don't have so much of options. And so it's what's available that works and makes the prevention of the pandemic from affecting, regardless of what insurance industry we're talking about. That's the solution that people are going for. That's what I'll say.
Right, yeah, trust, I think that's one of the key word here for the industry. And if you, just to add on to what you have said, Mr. Tunde, Ideally we're looking at the industry which itself is a digital natives, and post the pandemic, I think this is an opportunity that will be capitalized by such players and technologies and individuals out there, right? And as you've also mentioned about the motor insurance part, so of course, they due to this crisis, there are no new cars, no new properties that are being bought. But at the same time, who have already purchased earlier, there are actually very fewer claims. So that may, that itself can be another side of the sector, which is kind of an opportunity considering from the commercial viewpoint, right? Okay, well, great. Thanks, Mr. Tunde, for those points. I'll just, considering the interest of time, I'll just quickly move on to our next speaker, which is Mr. Suresh KR. Mr. Suresh, am I audible to you?
Yeah, loud and clear, Surya.
Thanks very much. So, Mr. Suresh, we are seeing, of course, we have discussed some of the points right before some time, that there's a rapid growth in the insurtech industry, right? That is beginning to disrupt the traditional insurance provision in emerging economies, and it's creating both opportunities as well as challenges for the incumbent startups as well as the investors. So having said that, the opportunities offered by insurtech is particularly becoming significant in emerging markets where there's a large protection gap that is existing, but mainly due to low insurance penetration, especially because when we look at the economic growth, so that's it's very highly closely interlinked with the insurance penetration. So how do you think, according to you, insurtech can close this protection gap in emerging markets like India and other regions?
Right. Thanks, Surya. First of all, for insightful inputs on this topic, and to Dr. Tunde, who pretty much kind of gave us a very good overview of what's happening in the African market. To a great extent, I find a lot of resonance with what happens in India. Now, to pick up the point that you just now made in terms of under-penetration, I would like to just take one step backwards and see why this disruption is now being accelerated. So traditionally, insurance has always been a push product. So there's always been a need for a channel to kind of go and sell the product, and the models in terms of underwriting has always been more in terms of looking at large data, not really looking at individual customer behavior. So the cost structures of the insurance companies were high. That was driving the price to be high. There was a need for an intermediation cost, and in terms of having a larger intermediation network to reach the people, so that was further driving the cost up. But that in a way also kind of made it difficult for people to buy into insurance, and hence the under-penetration that we see in some of these emerging economies. But insurance is one of the last industries, I would say, when it comes to adoption of technology as an honest admission. Insurance as an industry is a bit of a laggard when it comes to adoption. But the change world over on terms of data and in terms of intelligence and big data and all the AI-led technologies which Dr. Tunde was talking about has a percolating effect in insurance as well. And we see new pockets of capital coming in terms of trying to disrupt this industry with lean structure, lower cost structures, trying to invest in terms of better customer-facing technologies, which would probably help it as a low-cost distribution model. And then you see the traditional companies in the market trying to see how do they kind of adapt themselves to it. And there you see another set of insurtech companies which partner with traditional companies to try and bridge this gap. So you either have a full stack digital insurtech firms, or you probably have plug and plays who try and support the traditionalists to try and bridge the gap. Now here we are trying to interestingly move the entire competition from physical world to the digital world. So the increased competition is trying to bring people for innovation. So that's where this penetration will also get addressed, where we find today in India, the POS model is kind of like waiting, is on the tipping point, and it is really kind of like going to go big. So now with the regulation kind of helping people to come into this business easier than before, and also with technology investments, there are a lot of brokers who are able to sign up POS under them. And these technologies, which is kind of like riding on the mobile first category today, because there are significant amount of new internet users who get introduced to internet only on their mobiles. So any industry, any insurance provider today, if they have to be in the internet space, has to think mobile first and cloud first. So companies like ours, who's really kind of like right from the genesis has been a cloud first company, we are able to provide solution which is light on the devices. The interfaces are much easier. We build on APIs, which makes the communications far superior and easier and very secure. So that helps these POS model to kind of like mushroom. So my sense is that going forward, even in the hinterlands of India, in the towns and tier 2 cities, we will have the traditional agents very conveniently using digital platforms to onboard a lot of first-time insurance buyers into the market. And that is going to explode the market in the coming years.
Right. Yeah, absolutely. The insurance business model, I mean, as you have rightly mentioned, has been certainly resilient with little change over many decades. I mean, it's the industry globally, it's pretty much risk averse. So, but however, when we are seeing the shift that is happening with these emerging technologies, and you said mobile first, it is in a way, it's revealing the cracks and challenges for the industry. But of course, there are opportunities as well, but it would depend how the industry, how the incumbents in particular, who are capital intensive, would actually try to grab on these opportunities. And partnership, of course, as you mentioned again, is some of the key ways to go ahead in this particular revolution, what we are seeing. That's fantastic, Mr. Shreyas. Thank you very much. So moving on to another key area, that is, we have been talking about the shift in business models and how digital changes are driving those movements. So, digital technologies are giving rise to various new business models, irrespective of the industry. And for insurance, we have seen developments in models such as on-demand insurance, peer-to-peer insurance, and usage-based insurance. So how do you see this type of operating models getting traction in India in the coming days?
Yeah, see, we see a lot of such trends emerging in terms of P2P insurance or UBI. But what needs to be looked at is any model has to reach a critical mass to kind of like have that to be as a way of living. So a lot of fads emerge, a lot of trends emerge. One has to wait and watch whether it really kind of like solves customer pain points to a larger segment for it to actually become a model in itself. Some of these are very good initiatives, like what we talk about in terms of telematics or usage-based insurance. We see a lot of potential on usage-based insurance, need-based insurance as we see. So recently we managed to kind of like have a product launched as a bite-sized product for coronavirus, which is again a very specific need-based insurance. So we try and bring down the cost structures low because we are not trying to add a lot of wells and whistles to the cover. So the cost generally goes up in any product when there is a lot of unnecessary coverages built in it, and rather than to give the core cover which the client wants. So usage-based insurance or a need-based insurance is going to address that demand, where you try and make sachet insurance, small size, small ticket, and it addresses a particular need. So the client also tries to easily buy into the product rather than to have a long gestation period in purchasing the policy. So that definitely is going to be here. Now, when it comes to telematics or any other such technologies, what we try and observe is that actually kind of like going to help bring down the cost structure of an insurer to the extent that he is able to bring down the price much below than what is already there in the market. Because some of these product categories, especially in India, post the de-tariffing, has actually gone to such low levels of pricing, there has to be a discernible impact of these technologies so that an insurer is able to further bring down the price. If the price is currently not sustainable, these may not really make much of a difference for the consumer because an insurer cannot pass any further price reduction in it. So one has to wait and watch what is actually going to be the discernible impact coming from some of these technologies like telematics.
Right. Yeah, of course, some of the products that you have already mentioned, which is part of the part of your organization, Go Digit Insurance Company. We are certainly seeing a lot of those products coming up, and which is actually disrupting the market with very new, not just offerings, but also the perspective of how policyholders looked into insurance. So, with this, I would also like to add another question, that is, we have recently witnessed your another product, which is the launch of paperless healthcare insurance, Arogya Sanjeevani. So, that would provide basic health insurance cover to the people, especially focused on the newer generation. So could you also please give us some more information on this? And it's more interesting because it's focusing on the youth. So who are actually, the mobile first users.
Very true. See, as we said, the insurance industry needs to bring in new customer categories, new segments and profiles of people. And that's when you really have the penetration going beyond the 3.7% of the GDP of what we see in India. On the non-life insurance, it is yet to touch even 1%. So some of these initiatives help us to attract new crowd. So what we are looking at is to try and make the product relevant to a particular customer segment. So by relevant, we say that it should appeal to them in a way it is easy for them to buy at a moment that they need. A lot of this, what we need to look at is insurance distribution also has to be reimagined. So today we look at insurance to be kind of like more a push product, as I just explained a little while earlier. We should also look at, can I actually try and make this a little more having a pull impact? Can I actually be at a place where a customer is purchasing another asset, or he is probably making a financial transaction? Can I be there for him to try and buy insurance along with what he's currently transacting with? So that is the ecosystem approach, where we try and be in a place where another transaction is happening and we get bundled. But for that, the product should actually be most relevant to that particular life stage requirement that the consumer has. And also that the product cost should actually be very light on his pocket. So he tries to make that decision instantaneously. So some of these initiatives, that learnings that we take on this goes back in terms of a product development as well. So whenever we try and develop a product, we try and look at it, is this actually going to satisfy a core need of a consumer? Am I trying to kind of like add up unwanted stuff and try and increase the cost for the consumer? So in that light, this Arogya Sanjeevani, we try and make it simple. The prices are kind of like kept low because we are a digital firm. So it's a truly paperless organization. We have completely kind of like done away with any documentation requirement physically, even in terms of onboarding of the customer as well as in terms of the claims journey. So these helps us to bring down the cost structure, so our prices could actually be very attractive, especially for these young crowds where the health profile is also good. So we keep the price attractive. Two, we make it easier for them to onboard into us by way in terms of buying it through an app or through in terms of a portal, where the user interface is so simple, and just about in 3 minutes, we try and get them onboarded into purchasing a policy. So these initiatives we believe will help them to kind of like get first-time users into the insurance market. Just as a closing comment on this subject, the COVID policy that I was just saying, which we launched in the month of February and first week of March, now within about 3 months, we have managed to kind of like get 700,000 lives into the program, purely because of the entire digital journey that we have had.
Right. I mean, that is fantastic. What are the innovations going out there in the industry? It's something that nobody has actually imagined even a couple of years back. I mean, how we are going to perceive the insurance market to be, the ease of access and understanding the risk, be it with respect to one's property or individual health. it's very much fascinating. And as you have mentioned, the KYC and the pricing cost structure, the kind of innovations that we would ideally would like to pass through the entire value chain of the insurance model, be it from the KYC, understanding the customer informations, verifying the informations to use for verifying claims, through the underwriting process to product development to distribution, and including your, of course, besides the claims processing, the reinsurance part. So these are some of the very bold journeys that essentially we are looking at in the industry. Because it's recently, I was just have come through another very interesting case on marine insurance, on how the insurtech element is actually revolutionizing the entire process of insuring a ship, and how the algorithms, how the use of blockchain and IoTs and sensors would actually help not only just the sellers, but the insurers and the middleman who are into it to understand what exactly the risk of sailing and the directions and other parts, whatever comes under the insurance coverage, to recalculate and calculate and again recalculate the exact risk of sailing. So this is going to change everything on what we have seen in past decades. It's massive. Thank you. Thank you very much for all the insights, Suresh. So with this, we would close our discussion with both our esteemed panelists, and we'll open the panel for questions.
Hi, Surya. This is Shubha. So I have a question from regulator's standpoint. So first of all, am I audible to you?
Yes, Shubha, we can hear you.
Yeah. So thanks, Mr. Suresh and Dr. Tunde, for the insightful views. So one of the questions that I have, and what we are seeing now, like typically insurance product is now slowly is shifting from a grudge purchase to kind of a nudge product. And over a period of time, we are seeing the changes in buying behavior. And also what one of the points Mr. Suresh mentioned is about sachet product. And this is one of the things which is actually very predominant in Malaysia, because AXA has launched a lot of products around that. So starting from morning walkers to joggers to everything. So, so that's an interesting point. So now from regulatory standpoint, so how has been your experience, Mr. Suresh, with regulators in terms of launching these sachet products, in terms of how open are the regulators with these kind of products, and is there any kind of limitations or boundaries a regulator draws on the new products that are launched by insurtech companies? So what has been your experience with regulators?
Yeah, thanks a lot for raising this point. And what I would like to say is that typically whenever we talk about regulation, the first thing which comes to mind is in terms of probably some difficult compliance requirement or some kind of a roadblock. But I must say that the Indian regulation is really kind of like getting eased up. And a lot of learning from the sandbox regulations of the UK has actually been imbibed in India. So what we have seen is there is a wave of new sandbox regulations and products which is getting launched. So the regulator has been allowing the insurers as well as the intermediaries to file products which could probably address to a particular customer segment or a need which currently is not getting addressed with any of the traditional products, and try and gather some data around it for a limited period, and then go back to the drawing board, evaluate whether the product is really kind of like working fine, Is it really addressing the need? Is it viable from a pricing that we have launched it for? And then if we find it to have a market which could also be recurring in nature, we could always kind of like go and file it as a product for a longer shelf life rather than for just the piloting purposes of it. So this window of sandbox products has really enabled a lot of innovation in the industry around products. So we are really kind of like happy about this development, and we are really kind of like capitalizing on this. And we hope that this trend continues, and so that we really have innovative products and low-cost sachet products coming in, bite-sized insurance, which really kind of like addresses the customer need and brings in new users into the market. So I would say that the regulation is fairly encouraging and helpful on this regard.
Thanks.
And if I have just to add on a bit or more on the commercial line side of it, which is on the other side of the spectrum, where the guidelines were relaxed few years back, where the Indian regulator came up with a suggestion that commercial line products need not be formally reviewed and approved by the regulator before the formal launch of the product. So today in India, any insurer, if they want to launch a commercial lines product, all that we need to do is to frame up the entire product spec with all the actuarial model around it and the wordings of it to be filed with the regulator. And we are free to launch that product within 30 days if there is no specific concern raised by the regulator. And in the future, if there has been some issues with the product, the regulator always has the right to ask people to withdraw the product. But at least the go-to-market time from the ideation to the execution is not more than 30 days today on the commercial lines. So which is kind of like unparalleled, and this is path-breaking. So we see a lot of such commercial lines products which have come in this kind of an approach. Even if I have to talk about weather insurance or derivative products, have been launched in the Indian market with this kind of a time slab of 30 days from ideation to execution. So the regulator has done their part in terms of kindling innovation on products.
Thanks for the insights. Thanks, Mr. Suresh.
Yeah, this is Giridhar. The question is to Mr. Suresh. Good evening, Suresh. This is regarding the specific COVID-19, the specific policies which are just emerging in the market from various insurers. And what is the sustainability of it? And, because some of these have come in March and vanished in May, or, they're not extending and the price is getting increased. And we're not sure whether we're to go in for that particular, specific kind of a need-based policy like, this for COVID-19. What is the sustainability in the market of these products, and, how regulators are, accepting this kind of duration, whether they give any kind of a minimum duration to be sustained or not?
Right. Mr. Giridhar, first and foremost, nice to kind of like see you in this platform, and thanks for taking the time out. And with regards to your specific query on this product on COVID, see, the regulator, as I told you, allowed sandbox approach. So some of these insurers had launched product under the sandbox regulation for COVID, more in the nature of a benefit policy. So a benefit policy in the non-life space has been more traditionally only on the personal accident side of it. So for illness, health insurance on a benefit is where a lot of life insurance companies had offered that product. So for non-life insurance companies to offer a sachet insurance, which is on a benefit platform, not on an indemnity, was a sandbox approach. So the regulation allows the insurance company to experiment with these kind of thought processes, but also to take care of the customer interest. They also have a ceiling in terms of what could be the number of policies that can be sold, so that it is only a pilot initiative. And once that particular mark is reached, so the insurer will not solicit further businesses in that. And they will then have to have that data points collected for a review and then see whether they can launch it as a formal product. So that is what has happened in some of these products around COVID. So the withdrawal of the insurers is more because of they having touched the regulatory ceiling of the number of policies. Now, when you ask about sustainability of it, one has to look at actuarial signs in it, because every actuary depends upon historical data and then try and model it for futuristic behavior. But for ailments and conditions like COVID, which is unparalleled, unprecedented, we do not have past data. So all that one has to make is in terms of trying and take a calculated risk to launch a product with available parallels that one can draw, or with data emerging in other parts of the globe. Because this being a global pandemic, there is always some or the other referenceable data from the other countries. So with best available data, a product developer has to kind of like put in a model to try and see what is going to be the best price for this particular unprecedented scenario. And then have to calibrate as the experience happens in the local market. Because every country, every demography, even within India, within the states, there has been so much of variation on the experience around COVID. So after the launch, depending upon the experience of it, slight calibrations are being done, since we do not really have a prior experience on this product.
Thank you, Suresh.
Any other question? So I have one question to Dr. Tunde. We have been observing a lot of buzz going on around financial inclusions, and particularly for the BFS industry, the involvement is getting more attractive from government agencies, private players, tech players, and the boom of microcredit increasing, the digital identities, and etc. But for some reason, there is less interest being gathered for the insurance-enabled financial inclusion, which is not taking off for some purpose or the other. Do you have any thoughts on that? What perhaps may be the driving reasons for this particular thing? What's happening in the market?
Well, thanks, Surya, for that question. This is where this is the direction in which the industry is teetering to. You're having a situation where there's a microcosm between the insurtech space and how it eventually galvanizes financial inclusion. When we take large size population economies, right? Africa, India, Bangladesh, so to speak, what has happened is that you're having a situation whereby you're able to see how, by the inclusion of such innovative products, to borrow from what Mr. Suresh was saying, where you're having sachet products and granular products, you're able to have households actually get into the space where they're able to protect catastrophic incidences, right? So an example will be, for instance, in the west of Africa, there's an agro insurance solution by a company called World Cover. And so essentially what they've done is to sort of give a protective cover to farmers, right? And at the different seasons in which they're planting and growing different crops. So what this insurance does is they're able to weather disasters and flooding and situations whereby they may face some sort of challenges, on the field, right? And with the peace of mind that they're insulated if any of those things happen. For instance, if there's a fire, or there's a disaster that was unforeseen, they have a leeway to come out of it, right? It's helped different farmers and different their households to be able to have the confidence to go specifically into the field, to keep doing what they do on a regular basis. And because of that, it's been able to give them confidence for them to grow, into scaling their operations from manual into automated, where they're able to have farm machines, and they know that there's some level of cover for them. So inadvertently, what is going to happen is, on a case-by-case basis, the cover that each industry presents itself, whether it's agro, auto, life, general, or health, somewhat is going to push into the scope of including people into the net, especially in places like in Africa, right, where there's a lot of dependence on covers that are outside the insurance net. I mean, people would normally depend on family members or their immediate surroundings, when something catastrophic happens. I believe very strongly that as it grows, right, and especially with the granular solutions that are uprising, with this particular times, it's going to shift and pull things towards the direction of financial inclusion, despite the fact that, that is not usually the primary goal of most insurtech or insurance companies, right? There to provide cover, but inadvertently, I would say it goes hand in hand, and it's something that will continue to increase and improve, especially when with the scope of the micro granular levels as to which covers can go in the different specs of insurance.
Right. Yeah. Just to add another trend that I've been seeing over the course of time is, the leading insurance players are also not quite, have not rather showcased any sort of an effort. They're not quite, instrumental in trying to enable some sort of a financial inclusion, as I can understand. So, the majority of the insurers, even at a global scale, are focused on a certain segment of the society. And in comparison, if I look at the BFS sector, they have benefited a lot servicing the underbanked and the unbanked. However, the insurance sector have not yet done that. I think that is one of the biggest opportunities that is lying, be it from an agricultural insurance front or micro insurance or any other models that is coming up for the insurtech segment. But overall, it's a fantastic discussions, a lot of insights that has been exchanged. Thank you to Dr.